Good morning, good afternoon, good evening to one and all. This is the Smoking Barrel. I'm Rustin Edwards, based in Geneva, and my illustrious recovered co-host, Mr. Matt Stanley, in sunny, beautiful Dubai.
Yes.
How's it
I
going?
not bad. Not bad. I used to be a professional at IP weeks. I am nothing short of a novice these days. I That was nice. It was good. It ended
Perfectly.
bad, ended poorly, but it was fine. But no, it was we had a really good lunch, you and I, didn't we?
Well, yeah, yeah, I would say it was a good lunch that rolled into dinner, that rolled into after dinner.
Yeah. It was amazing. It was like being taken over by the Americans. I thought I'll go to a pub in Shepherd's Market on a Sunday afternoon. There'll be no one there, and within an hour, everyone around me, and it was a packed pub, was American.
Yes, yeah, all fresh off the flight from either Houston or New York, and
Yeah.
all coming in for their respective 2015 plus year IP week.
Yes. Yeah. There was about 600 years of worth of experience in that one pub, but that was good. It was nice. It was. I mean, we're going to talk about it. I mean, my main takeaway was, I mean, there's a couple, but I think everyone was a bit glum. I would say everyone was a bit glum. Margins are tight. It's been a fairly benign market all year, aka boring. So, lots of volatility in terms of volumes, but not in terms of price swings. Even though that the world has been sort of awash with pretty flat price, tingly headlines. You know what's happened in Middle East, Trump, tariffs, China. We could talk about all that. I know we will, but all of it kind of, if you sort of mix it all up, resulted in a bit of meh. And I think that was kind of where people are. I think people need a bit more. I actually argued this
Well,
week. I've known people sort of said stop feeling sorry for themselves and got up and dusted themselves down.
I would tend to argue that the psychology of most oil traders is to be a bullish trader. Everybody likes to see prices go up because it's easy to go long and very hard to go short. And so to jump on a positive news bandwagon is what everybody wants. But now that we're here at the last third of the first quarter, and we've already had crude sell off from the highs in January to where we're at now, dipping down to $70.70 on front month Brent.
Yeah.
It's a bit of a bearish stint, and as I've said earlier, this year will be a very tough year for a lot of traders because it's very hard to jump on that bearish bandwagon, especially when, yeah, you could have a geopolitical headline that could whipsaw the market in the other direction. But right now, it seems like all headlines are making the market point south.
Yeah.
Um, and anywhere from tariffs on China, U.S. and Canada, U.S. Mexico, which are going to impact the overall manufacturing base of the world, which is going to in turn make oil energy demand drop even further. OPEC announcing that they're going to comply with their output cuts, which I think was the most consensus I heard in the marketplace was everybody's expecting OPEC to roll the cuts forward out to Q3,
Yeah.
if
Yeah.
not all the way to next year,
Mm.
just based on the current S&D models that everybody had going into IP week. Stock builds across the board. Can't see how OPEC can bring oil back into the market. OPEC should push the cuts forward. And I think that was the prevailing consensus I had in most of the discussions around Shepherd's Market and other places and meetings that I had during the week.
Yeah, I agree. I
But
mean, look, like you said, 82.63 Brent hit the high in the middle of January. I think people thought it was going to get carried away. I think I was speaking on, I
that
was
was the
listening.
announcement of the new sanctions on Russian oil,
Yeah, that's right. That's right.
transportation.
Yeah.
And here we are, $12 lower, and those sanctions have not been removed. However, it seems like the workarounds have been put in well into place, and oil's moving again.
Yeah.
Uh, but it's still a question of how, what's been sacrificed for the sake of moving crude. Has fuel oil been sacrificed? I mean, if you look at the strength of the high sulfur fuel market right now, you'd think that, my God, high sulfur fuel is the shortest material in the world right now. Same thing
Mm.
with naphtha, which are also predominantly two big products that are exported from Russia.
Yeah.
Um, so you think there has been some impact where ships have been moved from one species of fuel to another species of fuel to move, and thus keeping the market tight in certain markets, yet loose in others.
Yeah, look, I mean, since that high in January, we're down 15% since then. So, and that's less than 2 months. It's quite brutal. Nothing sort of fundamentally has changed. Arguably, this is a conversation. I'm not going to
I
comment
would
on
say, I
OPEC.
would say fundamentally in oil, nothing's changed. However, the market's dynamics have changed because you've had the implementation of these tariffs now on US China, US Mexico, US Canada.
Yeah, but
And that is a
only about
fair
four
amount of
hours ago.
economic activity.
Yeah, yeah. I know, but it's
And
a bit. I
so
mean, yeah, it's only about 4 hours ago that came into force. But this was the argument that people were saying. I'm not going to comment on OPEC, but we saw Trump lift or would he pull the license for Chevron to start importing to stop it. They're going to stop importing Venezuelan crude. That was one. Is that going to
yeah,
upset balances? And then we've seen the market perception on what Trump may do within, stricter enforcement of sanctions in Iran. You know,
which they did announce more Iranian sanctions the same week they pulled the license from Chevron.
yeah,
So, that has, so the maximum pressure campaign comes back into force. Yet, I think the big difference between 2016 and this year, 2025, the two different Trump presidencies, is the fact that there's more assets available for Iran and more people willing to trade in that space than where there was before.
yeah, I know. But I mean, if you're those the sanctions that were announced, or the tightening of sanctions were announced, the Chevron license being pulled by Trump last week, did they move flat price when they were announced? Or did the
It
OPEC
actually
news yesterday
it
move?
caused a small spike. I mean, so flat price did go up on the headline, but then
Okay.
when you start looking at the overall balances, it really doesn't move the needle
Yeah.
because that 25,000, 250,000 barrels a day are getting replaced by somewhere else.
So what do you think if Brent breaks through 70, what happens? Gloves off?
Gloves off in what regard? I mean, do more people start eating honey?
I can't see it. There it is. That's Swiss honey, people, just in case you didn't know. Please like, comment,
For all you
subscribe. Not
bears
full of
out
honey.
there, enjoy the feast.
I don't know. Like you said, so if you're a trader, then you can form an argument to sell it. You can't form an argument to buy the market right now.
Well, I think at this point you've got to go kind of more neutral than sell the market because the market's already made the move. I mean, you should have been selling this 2 weeks ago, 3 weeks ago. But I mean, to sell now, okay, what's your risk return? I mean, do you think the market goes to 70 to 65? Does the market go to 60? I can make an argument that we could see $65 crude. I think that's kind of the natural floor. But I think to get the $65 crude, you might overextend on a sell-off and hit that number. But to sustain 65, you're going to need to see a full relaxation of sanctions against Russian oil, especially from the US point of view.
Okay, so with say a $4 Brent TI spread, if Brent gets a 65, TI's at say let's argue for argument's say 60 around there.
Yep.
We saw US crude production hit an all-time high last week of 13.5 million barrels a day. We know Donald and Vance have got this energy agenda to drill, baby, drill. But at $60 a barrel, are those producers going to continue this trajectory at high levels, or does that start dropping off?
Depends on what they have for hedge value. I mean, how much have they hedged versus production line? Also, what is their baseline cost structure? I mean, if their base break even cost is $50, okay, you still produce at 60. If your baseline cost is 60, you may start squeezing back the well unless you're
I know,
hedged.
of course. Yeah, I get the economics, but I'm saying what's our view here? Is our view that WTI at $60 a barrel, it does the dynamic work of record all-time high production, or I just get this feeling that at $60 a barrel, people start tapering off.
Well, they could. I mean, that could be definitely what happens because again, you have that whole price bucket of production. There are people who have $30 production costs, people with $65 production costs. And you'll start losing production as those more expensive wells start becoming less and less viable.
Yeah.
Now, unless they've been contracted out, i.e., okay, they've got a sales contract for a certain amount of time, or they've got a take or pay agreement with some of the pipelines where they have to either use the pipeline or pay the pipeline company for volume not shipped.
Yeah.
There's a lot of other dynamics that start flipping into the economics around do they produce or do they don't produce. I mean, if you're going to
Yeah.
pay a pipeline company $4 a barrel for not using their pipeline, well, then that means your actual you don't stop producing until you get to 54, 56.
Yeah. I mean, look, what we now, we're 4th of March, 50 days in roughly in a Trump presidency. Let me just share something with you because I want to show you what the reported and implied US crude and condensate supply figures look like, which is courtesy of the EIA, the Energy Information Administration in the good old US of A. But before we get onto Trump and tariffs and what's going to happen there, I think the market may settle down into now because I think, again, just going back to the IP week point, I think the market was still a little unclear on what he was going to do. Largely, he has done what he said he was going to do. I mean, forget
Yes.
Ukraine and what's happened there. He's
Yeah, but even with Ukraine and what's happened with Ukraine, it was all part of what he was politicking on during the election.
yeah.
Pull the U.S. out of foreign engagements, pull the U.S. out of foreign wars. These are all things that he said during his campaign. And so he's not doing anything, as far as I can see, outside of what he promised during his campaign. That's why I'm surprised people are shocked at what he's doing, because he's
Well,
a politician who's actually following through on what he said he was going to do during his campaign.
well, is that the kind of like head scratcher? It's Laurel and Hardy sort of like, because the long has it been, and let's not, it's not an illusion that more politician may have fabricated the truth to get, into power, whereas Trump has largely gone da 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 da. Da. I told you I was going to do this, and I'm doing it. Do you think people are going? Yeah, he did actually. Maybe I need to
Well,
rethink something
that's
because
that's
people
the
priced in a lot of like, even now you sort of. I was watching an interview last week with the ex-chancellor of the UK who said, that Trump is still an anomaly, that he's unpredictable. I think the one thing that has been the most predictable this year is Trump has said what he was going to do. And I think
yes,
that is what people are kind of taken back with a little bit. Don't you think?
it's unpredictable in the framework of the uh, global order that has been established for, let's call it 20 years, from the Obama administration to the Biden administration to the Bush administration. Trump is unpredictable in that lens. And that's the lens that most diplomats look at the world in, under that same lens.
Yeah,
Trump's not part of that club. He's not part of that group. He's got his own mindset of how things happen, like it or lump it.
yeah,
He is that way. And so, yeah, he does not agree with the global view of how the world should be. He is more of a, like I would say, more of like a Teddy Roosevelt figure in the regards that he is, America, 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 and screw the rest of the world. Um, and that's very subjective on how Teddy Roosevelt was, but Teddy Roosevelt was America first,
yeah,
and so were a lot of other presidents prior to maybe Roosevelt, and that's when the focus started going back on the rest of the world, rebuilding Europe and rebuilding the rest of the world after World War II.
yeah. Yeah, look, I mean, we don't get political on this podcast, people. We don't. But, you know, I think a lot of people, myself included, when they saw the Zelensky interview on Friday, were a bit like, "Ooh, that was a bit punchy." But I mean, is it a surprise? I don't know. Does it matter? To be discussed. It's not. It's not in the optics of what it means for energy. It doesn't. But it's clear that the narrative is aggressive coming out of the White House, and it's very much, as he said. But look, let's just go back to this because while I've got this, you can see the 13.5 million barrels a day in March. This came out only last night. But so what does it mean? The two things you can read here, bullish on US and crude and condensate production. Bearish, a potential postponement of the US tariffs on oil imports from Mexico and Canada expected to come into effect on 4th of March. Now, that didn't happen, did it? There was no postponement. Those tariffs are firmly there.
Yeah, because the U.S. hasn't woken up yet. So it could be that when we get to, Good Morning
No, they have.
America,
They've come into effect. This is a Bloomberg Live update. Stocks fall across Europe as US tariffs come into effect on Canada,
Yes,
Mexico,
they
and
came into
China.
effect at midnight. However, the U.S. can wake up this morning, which is another few 4 hours from New York wakes up, where the East Coast comes up, and there could be another change.
Oh, of course, of course. But right now, I mean, would you attribute the sell-off this morning? I know we had the news yesterday about OPEC, but would you attribute because your dollars coming on cable 127.20? Dollars getting sold. Is crude getting sold because we're Asia trading now, end of the Singapore trading window, $70.65, sort of settle around there. Is this a tariff sell-off this morning, or is it just a
I
hangover
think
of
it's a
OPEC?
general risk-off sell-off. Because not only do you have oil down, you have crypto took a massive sell off yesterday. Bitcoin down 9% yesterday, down another 2.5% here this morning.
Mm,
Gold, on the other hand, rallied, and gold is up again, almost 1% here this morning.
okay.
So to me, this is a complete risk-off mindset because again, you start impacting global trade through implementing tariffs around the world with one of the largest economies, uh, yeah, you can't be holding risk at this point. You got to
Hang on,
risk off.
hang on. This is interesting. So crude down, um, dollar down, gold up, crypto down. So are we saying the only hedge in a sort of ambiguous market is to buy gold?
Well, that's always been the history of gold. I mean, why has
Yeah, but
gold
so was
always
the
been?
dollar, right?
Well, but gold has a larger arbitrary value than the dollar because gold is gold, and historically, gold has always been a keeper of wealth. I don't care whatever country you live in, whatever economy you live in. Everybody likes the shiny yellow stuff.
Yeah, of course. But I would have
And
thought
so
that.
that becomes the ultimate store of value if you don't think the US is going to be that strong. Because when you think of all these tariffs that the US is putting together, it's negative for the US economy as well as for the global economy.
Yeah,
And
but
so if
hang
you have
on.
a negative input on the US economy as well as the global, you don't want to own the US dollar. You don't want to own US treasuries because that's a big negative. Yet you don't want to own any other currency because they're also going to be impacted. So you go to gold.
Right. So White House advisor Navarro, don't know who that is. Sorry, Navarro, don't know your first name. Any inflationary impact from tariffs would be second order small. What do you think of that?
I think that's a bit premature. That's right up there with the inflation is transitory.
And Donald J. Trump on his, I don't know, this is on Truth, I think. Tomorrow night will be big. I will tell it like it is. I'm assuming he's talking about he's got his golf handicap committee meeting or something, is he?
No, that might be. I think that probably has to pertain to Ukraine and the U.S. Support for Ukraine um, coming to an
That's
end.
that's March 3rd. That tweet or that truth came out. March 3rd,
Yeah.
7:39 a.m. So he's talking about tonight. Tomorrow night will be big. I will tell it like it is. I doubt it's that he's at the Women's Institute and he's just made his latest batch of chutney. I imagine it's a bit more dramatic than that. For any millennials, the Women's Institute, look it up, Google it. Anyway, right, okay. So Trump, Zelensky, what does it mean for energy markets? 13.5 million barrels a day
Well, I think the thing that
of
makes
crude
makes a
production.
point for energy markets is does because what's been going on the sidelines, along with the meetings around Zelensky, there has been a continual meeting in Istanbul between U.S. negotiators and Russian negotiators, and there's been a lot of discussion points around economic sanctions relief or how do you bring Russia back into the world economy. And so there could be a big announcement around that. Maybe they've got a breakthrough. I mean, there has been, one of the things that happened with the January 10th sanctions that were announced by the Biden administration.
Mm.
There was a hard and fast deadline. I believe it's March 10th for banking sanctions to be fully implemented against Russian energy. And so there is a bit of a hard, fast stop that if they don't find some type of rapprochement and come up with a solution, there could be even a further downside risk to Russian energy flows because the ability to use some banking systems will start to get curtailed due to this sanctions.
What you mean, these sort of nexus payments?
Yes.
Okay, interesting. I don't know. I haven't seen that. That's interesting because that
It's in,
would,
you have to go through and actually read the OFAC postings that were done on January 10th regarding all the different licenses that were going to expire and the different expiration dates for those licenses.
it's not at the top of my reading pile, that OFAC thing. It's not there. It should be. I apologize. Okay. Look, I mean, before we descend into a Paxman inspired Newsnight program, we are not that people. We're an energy podcast here. Spoken about it, Donald, way too much. But it is important. We said it is going to be, first 50 days of power that he'll be judged on the first 100 days of power. Moving on, let's talk about IP week, or IE week, IP week. A lot of people jumped on that bandwagon, They went, Stan, you're so right. I don't see any energy traders here. They're all petroleum traders. I was like, I'm sure I've started a good thing here. But I mean, a lot of people have been talking about it before me, of course. But
Right.
I would say my main takeaway last week was recarbonisation. Now, don't shout at me, and any Greenpeace members, don't shout at me. I'm not saying
Don't send us a nasty letter.
no, don't do that. Don't wish bad luck on it. Well, just look, listen to me. BP announced it's their fault, right? BP announced when was it? Fairly recently. BP announced
During IP week, they announced this.
yeah, BP announced a significant shift in its decarbonisation strategy, revising its previous commitments to reduce oil and gas production. See, it's them, not me. The company plans to increase annual investment in oil and gas production by 20% to approximately 10 billion, while reducing planned funding for renewable energy projects by over 5 billion. Now, lots to pick at there. I'm not just singling out BP. I think Equinor have said the same thing. There's a big thing
Well,
about biofuels recently. I'm pretty sure that the whole US energy infrastructure anyone within the US energy infrastructure would agree. Of course, the Middle East being providing 33% of the world's fossil fuels. But it's a significant shift that because I would say for the last 10 years, fossil fuels, especially in Europe, kind of ebbed away, ebbed away, ebbed away. And then people have gone, oh, we're not going to invest in that. And then suddenly people have gone, maybe we should actually balance this argument with the world still needs oil. Europe still needs oil. We still consume a lot of oil. Maybe we're not going to have enough because that balance has shifted now where Europe are a net importer, always have been, I know. But, you know, they want to sort of take a little bit back. I wasn't expecting to come away from IP week with a sort of good news story about future oil investment. Do you know what I mean?
well, I mean, you can say that, but when you look at the base economics of a lot of the green fuels that are being promulgated in the marketplace, let's take LNG because LNG, in my opinion, is a fossil fuel. It's not a green fuel. Um, and the cost structure around green fuels is so high that it's uneconomical to produce, and nobody really has an incentive to buy. I mean, when you're
Yeah.
saying, green methanol is 3 to 4 times the cost of normal bunker fuel, green ammonia, 4 to 6 times the cost of normal bunker fuel. It's like, where in the world is that cost going to get passed on to the consumer, where the consumer is going to say, oh, great, my cost of goods have gone up massively because of this cost of fuel that they're now using to transport from A to Z. Or I'm just going to shun products now because I just rather buy local than buy long distance products because, again, that import cost has gotten so stupid because the cost of fuel's gone up.
Yeah.
And when you look at the investment profile around these green fuels, you don't have the infrastructure investments being done to meet the fuel demand requirements for the maritime fleet. I mean, going down maritime route, or
Yeah.
any of the other industries that are going to require a fuel shift over the next 10 to 15 years to meet all these emission requirements that are being promulgated by different countries. So there is a need that we have to have a rebalancing of how much is going to happen and what's going to happen. Where does the investment dollar need to go? I've seen a far more interesting tact going down the recovery solution, i.e., carbon capture, as probably the best idea
Yeah.
versus let's change the entire infrastructure around energy distribution and go down these new fuels that don't have an economic viable track. Now, This also kind of plays against OPEC because OPEC for the last let's say a couple of years has been banging the drum that we need more oil investment. We need more oil investment. We need more oil investment.
Yeah.
And now they're getting it. And all that is going to do is going to hurt the relevance of OPEC in the world because now, okay, BP says they're going back down the carbon route. Shell's doing the same thing. They start investing into more downstream production, producing more crude oil, which puts more pressure on the OPEC side of the coin, which means how much more market share is OPEC going to lose because you've got these other companies who are now producing more crude. And it makes the market a bit more shaky on the supply side against a
Look,
diminishing demand picture going forward.
yeah, look, I think what's,
And
if we
I will
just
step
sort
off
of,
my soapbox now.
no, 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 you're fine. I don't wonder when you're going to get down. Jeez. Um, no, look, you're fine. But it's, I'll tell you what it is. If you would survey, and, I feel like Les Dennis is, survey says, if you survey 100 people and say, would you like to fly in an aeroplane that ran on sustainable aviation fuel? They would go, well, yeah, of course. I mean, why wouldn't I? I don't want to kill Johnny Polar Bear. I want to make sure that the plane's going to run on reused vegetable oil from McDonald's, right? That's great. And then someone says to you, okay, fine. It's going to cost you 5 times as much, though. They would go, hmm,
Driving
beach,
holiday makes a lot more
beach and
sense.
cocktails, Johnny Polar Bear. Beach and they choose the beach, right? And unfortunately, I know that's a really crass sort of analogy, but
But it's not a
until
crass analogy. It's a
no, but it's the truth.
realistic. It's realistic because most consumers, they may say, "Oh, I care about the environment," but they also care about their own comfort and their own existence.
Yeah,
And if you got a curtail on your livelihood and what you do because jet fuel's now 6 times the cost, therefore my ticket's 6 times the cost. I can't afford to go on holiday, so I'm going to stay home for 2 weeks. Well, I'll be able to get to all those things in the garden that I haven't been getting to because I've been going on holiday so much.
yeah, 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 exactly.
So it tells you need to buy stock in garden and hobby stores because that's the only thing that's going to be available to people who are sitting at home.
Decent trade that. So you're saying sell airlines and buy Home Depot shares? Is that what you're saying? Or B
Yeah,
and
there
Q?
you go. That's the trade. That's the trade.
B and Q if you're English. No, but I think that that's the look. I think that it's not like, oh my God, suddenly things have just shifted. Not at all. I just think it was the market was, or the opinion about the future of fossil fuel investment was so bearish, was like, ugh, done. I'm done with you. I'm done with you. Dirty oil, dirty oil. And then suddenly people have gone, maybe we don't have enough. And they've gone, all right, maybe come back a little bit. And it's going to balance itself. It was always going to happen. But I think you're right. I think in that, um, in certain areas, like you take again, you talk about the end user where they see the impact. You take Venice, for example, right? And I use this as an example. So I think you'll know better than I will, but I think cruise liners have been banned from the inner waters of Venice because of pollution and its effects. I get that, right?
It has a lot to do with the erosion of the underlying silt that supports the city of Venice, because the turbo wash from the props of these ships coming in and out of the harbor erode the beach quicker.
Right.
So there's a
Okay,
bit
but
of
there you
that.
go.
Plus,
That is not to, if Venice is going to be preserved, and it means that those massive 250-meter LOA cruise liners can't berth right in the middle of the city, good. That's a good thing. But if you're going to suddenly say, well, a cruise liner can't berth because you're not running clean fuels, that's a bad thing. So I think that there has to be this balance. And I think lots of people last week, especially in Europe, and I hate to say it, especially in Europe, are more worried about bureaucracy and what the EU state are going to do. This 5% tariff, whatever it's going to be on, if you don't have the right ESG rules, they're going to apply 5% tariff. I think on the Qataris on LNG, we've spoken about this before. I think that there just needs to be a lot. People need shaking, and I think that was kind
it,
of a main takeaway last week as
and
well.
to circle back to the tariff argument, everything that the EU does on environmental rules are just a tariff by any other name. I mean, yeah, the whole carbon cross-border carbon tax mechanism. Like,
Yeah,
oh, if you move your production to a place that doesn't have the same carbon rules as we do, we're going to tax you as if that production's in Europe, and if you bring those goods into Europe. The EU ETS. Again, that's a tariff on every ship coming into Europe. Oh, pay your carbon emissions tax. The ESG ruling, that's another tariff. I mean, so the EU, everybody points the finger at Trump and the tariffs that Trump's putting on his trading partners, the EU, China, Mexico, Canada, which in itself are most likely going to be poor economic decisions in the long run. The EU has been doing the exact same thing. But the EU has been looking at it from, oh, we're doing it
Yeah.
for an environmental standpoint and for the good cause standpoint. Yet, where does that money it gets collected go to? It doesn't go to fight the injustices that they're taxing. It goes to general funds and other things that take from those funds to do whatever they're doing. I mean, I
Yeah,
think the
look,
biggest thing, yes, on the shipping side was using that money to help develop new technologies and everything to support greener shipping.
well, isn't in a an indirect way, just before we close up, isn't in an indirect way, the ecozone that's coming in 1st of May, higher cost for vessels bunkering within the Med, isn't that an indirect sort
Well,
of consequence of that?
it's higher cost for vessels going through the Med, not only just bunkering in the Med. So
Right.
there's a whole thing about how big is the ecozone going to impact global shipping? The ecozone, the Mediterranean consists of about 14% of global bunker demand. And that is not only ships going into bunker, but it's ships that transit the Mediterranean, going from Gibraltar to Port Said, Gibraltar up to Istanbul, Istanbul to Port Said. There's a lot of cross traffic that doesn't stop in the Med, but transits that ecozone. And so
Right.
it does increase the cost structure of ships going through there.
Yeah.
Now, the fact of that cost structure is not a tax. I mean, so it's not like you're spending money to give permission to a government entity to go through. You're just saying, okay, you can't burn this fuel, but you can burn that fuel. So again, that money goes directly back to refiners via the whole supply chain because okay, instead of buying residual fuel, I have to buy gas oil, I have to buy LNG, or I have to buy put high sulfur fuel in my ship and use a scrubber. Um, so that's not a government tax as the EU ETS is a tax or the fuel EU maritime is a tax. It is a just change your fuel slate when you're transiting the zone because we want cleaner emissions.
Yeah. Okay. ECA, just for the uninitiated, emission control area. And to be fair, ARA has one already. The US has got one.
Yep.
Any other regions?
I believe Canada has one as well.
Okay. The 51st state, isn't it? Canada now? Is that what they call it?
According to Trump, it's the 51st. Yeah, Mexico will be the 52nd.
Ah, all
China
right.
also has China also has an ECA.
Okay. Well, there you go. Right. So where are we closing? $70.83, bit of a pop on Brent. Dollar still getting sold off. Look, let's chat about it next week. I'm not sure. The vast majority of people sort of, weirdly agreed with me that that was the kind of sort of main takeaway and the general mood. But I think people have pick themselves up, look at Q1, kind of leave it, park it there, and then I think we could see a bit more optimism come Q2. But we'll wait and see. We break 70 on Brent, and then it could be a different story.
Well, the question going into Q2 is going to be how much consumer fuel demand actually materializes as we go into summer driving season. That's always the make or break of Q2. And if you have this continued flat demand profile in China, if not a declining demand profile in China, declining demand profile in the United States and in Europe, it may not be a good thing. I've said it before, and I'll say it again. This is the year of trying to get a grasp on the dynamic changes in the Atlantic Basin and how they're going to impact trading. And if you don't have that grasp, you're going to be caught out.
Yeah. Yeah, you're right. All right. Good to see you. Like, comment, subscribe.
And remember, we're on Spotify, so check us out on the Spotify as well as YouTube, and we'll look forward to seeing you here again next time on the Smoking Barrel.
Ciao.